I'm Hillary Hendershot, your host, and this is the Retirement Years on Profit Boss Radio, episode 158. The Retirement Years on Profit Boss Radio is your weekly wealth building and retirement mastermind. Profit Boss is also a movement for women who want to reach their full wealth potential and be financially free. Let me be your guide as you defy the odds, take control of your money, grow your wealth, and retire well. Do you want the secrets of wealth and retirement to be yours? This is the place. I'm Hillary Hendershot. I'm a certified financial planner running a leading advisory firm for women and couples, and I'm sharing with you real stories from real life and real people who are making it happen. Forget Wall Street. You ready? Let's do this. Hello there, Profit Boss. Today is a quick and timely episode I'm recording because of what's happening in the stock market with the coronavirus event. I am with my family working from Puerto Rico. We are going to be here for 12 weeks in the spring of 2020 as I record this. Today is Monday, March 2nd, 2020. And this is all part of a greater plan to enjoy life and travel and have flexibility. I personally don't like working from the beach. I know that's a big thing people talk about. I can work from the beach. Well, I use a laptop and I don't like sand in my keyboard. But Puerto Rico is, of course, very near the beach. I'm very close to the beach right now, and we're in a place called Dorado Beach. And it's a beautiful resort, and I will be telling you more about it as time goes on. If you've been listening to the show for a while, you know that in 2018, my daughter Harlan was diagnosed with leukemia, and just a quick update, she's doing really well. She's got her hair back. She's on 3 or 4 different medications while we're here. She'll be on medication until the end of this year, but she's thriving. She's happy. She's just really, it sounds trite, but she is the light of my life. We are gearing up for the 50K Wealth Multiplier Experience Coaching Program coming in July of 2020. And I have been speaking to different groups all over the country. We will be offering the cohort co-ed this year. So we'll be accepting men. And I've been speaking with entrepreneurial groups and women's groups about my own financial turnaround. If you haven't been listening to the show for a while, many years ago, I found myself, if you include the value of my mortgage, $600,000 in debt. And I have shared my financial turnaround and the 7 steps to wealth that I used to literally transform my financial life. My business is a 7-figure business. My husband and I have a multiple 7-figure net worth, and I share all those numbers totally transparently when I talk with groups. And it just is really powerful because no matter where you find yourself financially, I've been there, or I know someone who's been there. So it's a great way to connect. And if you'd like me to come speak to your group, we'd love to hear from you at media@hillaryhendershot.com. Just to give you some high-level numbers, the first time we ran the 50K Wealth Multiplier Experience, we raised 9 women's net worth by more than $1.5 million. And I've shared about that on the show before. You can download the white paper in the show notes from today's episode. But I am going to get right to the topic of today's episode. Let's talk about the coronavirus. Coronavirus is here. The technical term for coronavirus is COVID-19. It's a respiratory disease, first detected in China, but now it's spreading globally. So the data I'm reading say that the virus appears to be about 1% fatal. So 100 people get it, 1% of those people will die. And from what I'm reading, that tends to be people who are already either sick or immunocompromised. That's the facts, and that's really all I'm going to say about the health aspects of this. There is a lot of good advice being published about it. So go to the show notes for today's episode, link to the things the CDC is recommending we all do, and read that firsthand. Let's talk about coronavirus and your money. Now, I have a legal disclaimer that I read at the end of every episode, but I'm going to add another one right here because I don't have any idea what's actually in your portfolio. And my message today is philosophically correct, assuming that you have a well-diversified basket of investments that's appropriate for your goals and timeline. So if all that's true, this message applies to you. I met someone last week who has their entire nest egg in their company stock, and it's $1.5 million, and it's one of the Silicon Valley giants. I'm not going to say which one, but this message would not be accurate for that person. American Airlines has grounded dozens of jetliners because they're canceling international flights. So, of course, if your portfolio is heavy in American Airlines, you're just in trouble, my friend. Any company that depends on a healthy amount of global travel to be profitable could be in serious trouble right now. Okay, so caveat communicated, yes? Don't make any investment decisions based on what I say today if I don't know you. Thank you. So, as I record this episode, the stock market is down approximately 10%, assuming you're invested in the market, which is one of the things I talk about a lot on this show. I think you should be invested in the stock market. There's a lot of real data that says you should be invested in the stock market. And I'm especially interested in empowering women to invest more in the stock market and build wealth. So, assuming you're invested in the stock market, your accounts are going to be down something similar to what the stock market is down. So, it will probably change in between the time I record this and we get it aired through iTunes and the other channels. But, your portfolio is probably down. And it is always scary to watch account values go down. I mean, we've been in the middle of a 10-year bull market, and I think some people have forgotten that the market ever goes down. So this could be a really unfamiliar feeling for people. And the media says that it's all about the coronavirus. But the first thing you want to understand is that nobody knows why the stock market moves when it moves quickly like this. So the media assigns causality, and I'm not saying they're right or they're wrong, but in fact, they don't know, and nobody knows why the market has moved. So there's no oracle of this information. The media just latches onto the most likely reason. So again, I'm not saying this isn't happening because of the coronavirus. I'm just saying that it's possible that some of this is not all caused by that. When global events like this occur, there are groups of speculators who do what's called shorting the market. It's a bit like putting your chips on the do not pass line at the craps table. So what they're doing is betting that the market is going to continue to go down, and this accelerates the decline. You remember the Hollywood movie that came out after the financial crisis, which was called The Big Short, that didn't refer to short people or coming up short. It was referring to one hedge fund manager's successful bet that the mortgage market specifically were going to take a dive. Okay, so he looked at what was happening as interest rates were low and the real estate market was sailing, and he said, I can see what's going to happen here. Everything is going to go down quickly. He shorted the market to make money as it declined, and he won big. By the way, as far as I know, that particular person hasn't won a bet since then. So he's no Nostradamus. He just got really lucky. But that's what shorting is, and shorting is probably making the problem worse. If you open up your accounts and see the values going down, I think the very logical response is to think, wow, I really need to sell out while this thing gets figured out. So your fear response gets triggered and you want to get out. That's totally normal. It's totally human. I experience it too. It does happen to me. Believe me. However, trying to time the markets is what many of the best investors in history have referred to as the loser's game. Why? Because you have to be right on both sides of the trade. So first of all, it's not accurate to state that because the market went down yesterday, it's going to keep going down today. You never know when it's going to turn around. Markets are forward-looking. They take all known information into account pretty much immediately. So when the market closed yesterday, its price is already included all of the known possibilities and likelihood that the coronavirus will continue to spread globally. I think this part is really difficult for people to internalize. I hear people talking about their predictions for the future as if those predictions have any bearing on the stock market. So if you think it, there's an analyst somewhere who has already thought it, and therefore the risk of it is already reflected in the stock values. Everything we already know is totally incorporated into the stock market almost on an instantaneous basis. But let's just say you do guess correctly. The stock market went down yesterday, so you make a decision to sell today and the market goes down. You feel like a winner. You won the bet. You predicted the future. But there you are with all your money in cash. And now what are you going to do? Because you can't keep your money in cash forever if you want that money to grow. You know, cash loses value over time. So let's just say you wait out the crisis. Cash is better than a falling stock market, right? So you wait for the thing to turn around and for the market to come back up. And once the market has fully recovered from the coronavirus scare, it's reaching new heights like it always does, and you buy back in. Guess what? You lost. You lost money. Say it went, just to use round numbers, from 120. I know your account is not worth 120. Let's just use round numbers. Maybe it's 120,000, maybe it's 1.2 million, maybe it's 1,200. I don't know. But let's just use round numbers. Say it went from 120 to 110, and that's where you sold out. Now it's at 110 and you have $110 in cash in your account, and you wait till the market's at 125 and you buy back in. You've lost $15. You should have just stayed invested and waited through the temporary decline and been patient. You wouldn't have lost that money. And that's the part most market timers don't get right. One thing to keep in mind is that temporary declines are totally normal. In the US, according to the Fama French Library, there have been 158 different two-day periods where it declined 4% or more, 49 two-day periods where it declined 6% or more, 15 two-day periods where it declined 8% or more, and 5 two-day periods where the market declined by 10% or more. So that means, for example, declines of 6% or more over a two-day stretch tend to occur about every 2 years. The market does tend to go up over time, and it has a history of sharp temporary declines. So this isn't rare. And also think about other outbreaks in the past. There was SARS in 2003, and 6 months after that, the market was up 18.6%. There was the avian flu in 2006, and 6 months after that, the market was up 11.9%. There was Zika in 2016, and 6 months after that, the market was up 14.2%. The market absolutely does recover. Not only that, but on the first day of the SARS outbreak, the S&P 500 closed at 855.7. 17 years and many viral epidemics later, today as I record this, the S&P 500 sits at 3,010.83. More than 250% higher. So I'm confident that you see where I'm going with this. I think that it can be compelling to think that this time is different, but I urge you to remain confident that we will recover. That's the conclusion, is that none of us have knowledge nobody else has, which means there's no reason to think you can outtrade the traders. So get yourself in the right portfolio for your long-term goals and ride the ride. Okay, Profit Boss, no Money Wise segment today. Thank you for listening. If you have questions, let us hear them at media@hillaryhendershot.com. Otherwise, thank you for staying subscribed to Profit Boss Radio. Hey, Profit Boss. If after listening to today's episode, you think you might be ready to take meaningful actions with your wealth and perhaps consider working with me and my firm in some way, then I'd love to hear from you. Just go to hillaryhendershot.com/hello. That's Hillary with one L and Hendershot with two T's. .com/hello. When I'm not sitting behind the mic, I'm running Hendershot Wealth Management. We're a fee-only fiduciary financial advisory firm. We work with women and couples to take their finances to the next level. Everything I talk about here on the show gets personalized and put to work for my clients. So I ask you, why wait till tomorrow when you can start realizing your full wealth potential today? The life you want to live, it doesn't have to wait. Just imagine the freedom and joy you'll experience when you've secured your retirement and enjoyed the years leading up to it. That's what I want for you. That's what I do for my clients. And if that's what you want for yourself, just head on over to my website right now, hillaryhendershot.com/hello. All of our initial conversations are totally complimentary. So let's just see where a friendly conversation may lead. hillaryhendershot.com/hello. As we wrap things up here for today, I need to review with you the things I have to disclose as a fiduciary financial advisor offering wealth management services through my firm, Hendershot Wealth Management, LLC. You should know that the opinions I express on Profit Boss Radio are my own, and they can change. The content I provide in the show is for general education. It's not intended as specific investment advice, nor do I recommend any specific financial products. Unlike how I roll at home with my husband, I can't guarantee that my statements, opinions, or forecasts are always 100% right. Of course, I wish I could peek into that proverbial crystal ball, but so far, I haven't found it. Past performance is not indicative of future results. I talk a lot about indexes, and I want you to know you can't actually buy an index because, of course, when you take a list of companies and create a product that allows people to invest in those companies, there are fees and expenses involved that reduce returns. Remember, all investing involves risk, which, as you know, means you could lose your money. And I have to tell you that there is no guarantee that any investment plan or strategy will be successful. And that should keep my lawyers happy. Have a great day.